Hi all, today I'm actually going to show you how to find companies in a net cash position. Now what do I mean by net cash position? Now basically in times of crisis or when stocks have fallen a lot and we're experiencing a recession, now what you want to look for companies with a strong cash position versus its debt position, which means that they are able to sustain their operations and hopefully survive through the recessionary period. Now, so I'm going to show you what it looks like. I'm going to show you stocks that don't fit the criteria. So I want to show you just one stock. The stock is called LSOF, right? All you need to do is search for the stock. So this is you're going to find out how you're going to know if your company is in a net cash position. Now, if you click into financials, you click into this link called 10-year franchise quality analysis. You click on that. Now, what this page will show you will be the profit and loss, the cash flow, and also the balance sheet all in one page. Now you can see that it's still loading. So what happens is very simple. So I'm going to go past the profit and loss. I'm going to go past the cash flow. I'm just going to focus on the balance sheet. Now this company right now has actually 72 million in cash. Now you can look at its business over the last 10 years. Since 2009, it's actually been growing its cash position. Now this is a good sign. Now you also want to look at its debt levels. Now if you look at its debt levels, short-term loans and long-term liabilities, if you can see this company has been quite prudent because they don't take short-term loans, and their short-term liabilities are fairly low. It's about 639,000 based on 2018 numbers. Now so if I have 72 million in cash and almost no debt, you are known as a net company in a net cash position. Now if you want to know what net cash looks like, so if you look at this line here that says cash over short-term loan plus long-term liabilities, if this is more than 100%, it means that your business is actually in a net cash position. So in this case, this company has continuously been in net cash position for the last 10 years, which means that it has a very strong chance of surviving the next recession and possibly grow after that. Let me show you a company that is not in a net cash position. So I'm gonna put SAP and see if I can get something. So I'm going to look at Sapura Energy here today. Again, I'm going to go back to financials and I'm going to go back to the 10-year FQA. Now you're going to see the very stark difference here. Again, this business is a very highly capital intensive business, and if we have problems with banks or if there's a credit crisis, companies who are in a very heavily debt position and their business comes down, they could potentially be in trouble. So if you look at this in this space here, this company has 8 billion in cash. You can likely see that probably this was due to a new fundraise. So it's got 2 billion, 1 billion, 1 billion, and then it went up to 8 billion. Now it's 8 billion versus its short-term loan and long-term loan. So it's 8 billion versus 17 billion. So you can see here, its cash over short-term loan and long-term liabilities is 47%. Now before this cash injection, it was actually only at 9%. Therefore, if you look at this system, you can very quickly see companies that don't raise enough cash may not be able to sustain their business. So that's it for now. Again, if you guys like to look at the definitions, it's right here.